4 reasons Bitcoin will never go to zero. Bitcoin going to zero is one of the most common myths people still believe, but the truth is this: Bitcoin mathematically and economically cannot hit zero, and here are the 4 biggest reasons why. 1. A huge portion of Bitcoin is gone forever. Here is something most people do not realize: millions of Bitcoin are permanently lost and will never enter the market again. Analysts estimate between 3 to 4 million BTC are gone for good because of lost private keys, broken hard drives, forgotten old wallets, people who died without recovery access. With about 19.8 million BTC mined by 2025, the real circulating supply is far lower. These lost coins are like burning a chunk of gold supply forever. They cannot be sold, they cannot push the price down, and they create a permanent scarcity floor. And on top of that, you have Satoshi Nakamoto's 1.1 million Bitcoin, mined in the early days. These coins have not moved for more than 16 years, which means they are effectively locked away forever. That is another 5% of the total supply that will never hit the market. Between lost coins and Satoshi's untouched holdings, a massive portion of Bitcoin's supply is permanently removed from circulation, which makes a price of zero mathematically impossible. 2. Even at ultra-low prices, massive buyers will step in. Bitcoin would only hit zero if nobody wanted to buy it. But in reality, demand skyrockets as the price drops. A famous example is Bitcoin pioneer Adam Back, who once placed a symbolic buy order to purchase the entire 21 million Bitcoin supply at $0.02 per coin. It was not just a meme, it was a message. There will always be deep-pocketed buyers waiting to scoop up Bitcoin long before it ever approaches zero. And it is not just early cypherpunks. Today you have institutions like Strategy who buy billions during crashes. Countries like El Salvador adding Bitcoin to their national reserves. ETFs holding long-term positions worth billions of dollars. Retail investors who buy dips out of conviction. Miners who remain invested because their entire business depends on Bitcoin's value. A price can only go to zero if demand disappears completely. But Bitcoin has more buyers, more liquidity, and more global interest than ever before. A world full of Bitcoin holders, from everyday people to billionaires to governments, will never let it reach zero. 3. Bitcoin is the most secure and decentralized network on Earth. For something to hit zero, the underlying system needs to collapse. But Bitcoin is not a company. It is a decentralized global network upheld by millions of independent participants. It has the highest hash rate in its history. Miners compete worldwide to secure the chain. Nodes operate across nearly every country. There is no CEO, no headquarters, and no central point of failure. You can shut down companies, you can bankrupt banks, you can regulate institutions. But you cannot shut down a decentralized computer network running worldwide. Even if governments attack, miners relocate. Even if exchanges fail, Bitcoin continues running. Even if individual countries ban it, the rest of the world keeps the network alive. It is mathematically and politically impossible to shut down Bitcoin, and a system that cannot be killed cannot go to zero. 4. Bitcoin has grown into an entire global financial ecosystem. Bitcoin is no longer just an online experiment. It has become a financial system supported by nation-states, corporations, institutions, and millions of everyday users. Entire countries now use Bitcoin as part of their economic strategy. In the United States, political momentum has shifted dramatically, from being anti-Bitcoin to now having a pro-Bitcoin president who has openly stated that America should become the Bitcoin capital of the world. With nation-states publicly aligning themselves and competing over mining, custody, and innovation, the idea of Bitcoin going to zero becomes impossible. On the corporate and financial side, Bitcoin is powering a new form of digital credit. STRC has built the first Bitcoin-based financial engine that rivals the traditional banking model. Their preferred stock structure attracts capital from bonds and money market funds, allowing investors to earn yields. These yields are powered by STRC's Bitcoin holdings and their recent $1.44 billion cash reserve. STRC is proving that Bitcoin works as real collateral in the financial system. This is not speculation. It is a working business model that is not going away. And even the most conservative institutions are now embracing Bitcoin. Vanguard, one of the largest asset managers in the world, spent years publicly rejecting Bitcoin. They called it a speculative asset and refused to offer exposure to their clients. But after watching BlackRock's IBIT become the fastest-growing ETF in the history of the world, Vanguard reversed course. They have opened the door to list BlackRock's Spot Bitcoin ETF. When firms that were once firmly against Bitcoin begin supporting it, it signals something deeper. Bitcoin has crossed into mainstream permanent global finance. Bitcoin is now bigger than any single market. It is used by countries, corporations, institutions, and individuals for saving, payments, remittances, collateral, and long-term preservation of wealth. Systems with this level of adoption and infrastructure do not collapse to zero. Conclusion. So the next time someone says Bitcoin will go to zero, ask them this. Why would an asset go to zero when millions of coins are permanently gone? Billions in deep-pocketed buyers are waiting below. The network is the most secure on Earth, and entire countries and institutions depend on it. Bitcoin is not just resistant to going to zero, it is structurally impossible. If you made it to the end of this video, type Bitcoin in the comments to show you're awake. And don't forget to subscribe to stay part of the revolution.